We have all seen the news on real estate. If you're in the market to buy or sell a house, or if you're even just remotely fascinated with what goes on in the real estate market, you know interest rates are going up, 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 and home prices are finally starting to crack. But does this mean we're on the cusp of the crash that everyone's talking about? Well, personally, I don't think we're going to see a crash in the sense that everyone thinks of. That word is charged with what happened in 2008, 9, and we're just not going to see something like that, in my humble opinion. So, let's dive in to what this all means. Hi everyone, Avin here, your agent guide, and in today's video, we're going to talk about the rising rates, home price depreciation that we're beginning to see in the market, and what it all means to you. So let's dive into the numbers and see what's really going on in the marketplace. All right, everybody, so let's take a look at the numbers for the last couple of months and get a better idea of what's actually going on in the marketplace. So like I said, rates are up, and we'll go over that in a few minutes, and home prices are starting to come down. Well, one of the things that we notice when we look at the numbers is year over year, which is the usual number we look at home price appreciation, we're actually seeing home prices are still on their way up. You'll notice that in the graph here, most of the country has seen a pretty substantial increase in home prices over the last year. But when we dig into the numbers for month over month, and these are dated, this is June numbers, June to July is actually a little bit higher in the depreciation rates. I'll dig into that in a minute as well. But if you look at it nationally, we're beginning to see the momentum break. You're starting to see some pretty major markets, particularly on the West Coast, Portland, San Diego, San Francisco, Seattle, Los Angeles, all starting to have month over month price depreciation. And then if we go into the Case-Shiller report, which is where a lot of this data comes from, and we look at the most recent Case-Shiller report that came out just this week, we see that seasonally adjusted, a lot of these markets have accelerated in their depreciation, particularly San Francisco, running at a negative 3.6% in their month over month home price depreciation. Also, here in the Seattle market, we're seeing a depreciation of 2.5% when seasonally adjusted. And probably the most important number when looking at this is the national number showing a negative 0.2, meaning that nationally we're now averaging depreciation month over month, not home price appreciation month over month. So of course, a lot of people are making the argument though that home prices are driven by supply and demand, and supply is still low. In fact, month over month in my market, Snohomish County, Washington, we saw available inventory drop in July to August from 1.9 months of inventory to 1.7 months of inventory. So the number of listings on the market has definitely slowed down. But again, nationally, when we look at the numbers and compare year over year, which is the norm in real estate, we do see that the rate of growth in available inventory has skyrocketed. Now, we have to look at these numbers with a grain of salt. Last summer, we had extremely low inventory. So specifically, if we look at Washington State, we have growth in inventory of 83% in August. That is huge, but we're still only at 1.7 months of inventory. At this time last year, we were sitting on about 2 weeks of inventory. That means that if every home sold at the rate they were currently selling and no listings came on the market, we would have been out of homes for sale in less than 2 weeks. So now there are definitely more sellers in the market, and that is a good thing for real estate as a whole. The problem is, with supply and demand, you also need demand. And as a result of the increase in supply and the breakdown of demand, again, here in my market, we saw from June to July to August, that month over month home price depreciation we saw the median home purchase price in Snohomish County go from $790,000 down to $760,000 in July, and then August it was down to just over $737,000. So if we have the supply, what happened to the demand? Well, what happened to the demand was the increase in interest rates. As the Fed has been raising rates to fight inflation, mortgage rates go up too. If you watch the 10-year Treasury rate, you'll see that there is a strong correlation between the 10-year Treasury and the 30-year fixed rate mortgage rate. So one, as a little bit of a trick, if you keep an eye on the 10-year Treasury, you'll get a pretty good idea on the direction of mortgage rates. Usually a couple of days, maybe a week or so of hinting in the direction of mortgage rates. But of course, this isn't means to be fully discouraged either. Homeownership is still very important, and we need to think about homeownership for the homeowner, not for the investor, as owning your home. So let's then have the discussion. What does this all mean for buyers and sellers? Okay, so we've seen the numbers, but what does it mean to you as a home buyer or seller? Well, right off the bat, if you are an investor, I would recommend sit on the sidelines and wait to see where things go, just because every penny counts in hitting your cap rate. But if you're a home buyer who's buying for your family, I would say now is still not necessarily a bad time to buy if you're set up with the right financing options or if you're ready to buy with cash. However, home affordability has taken a hit. More than 37% actually at this point in time. Now, that doesn't necessarily mean that you need to sit out in the market. You can still find good homes in these price ranges. And unlike this time last year, you're not competing against 50 other buyers on every single home you walk into. To buy the home, you don't have to take unnecessary risks by waiving your financing contingency and your inspection contingencies. You can go into the home purchase far more comfortable and far more confident. And sellers are being far more accommodating in order to get their home sold. They're accepting things like seller concessions or helping pay closing costs or helping to buy down your mortgage so that they can get their home sold. So for a buyer, no, we are not officially in a buyer's market, but it is far more fair to the buyer than it was a year ago or 2 years ago. So what about the sellers? Well, the number one most important thing if you want to sell your house right now to know is that you're still seeing some of the appreciation that we had seen over the last couple of years, just not as much. And we're also knowing that getting your home positioned correctly in the market when you list it is very, very important. Having the right real estate professional on your team will make a huge difference. How your home is presented is going to affect how much initial attention you get on the home, and how it's priced is going to affect whether or not you're going to have to do price drops in the future and what kind of concessions you're going to have to make to find the right buyer. So definitely have a good, strong, professional realtor, broker, or real estate agent on your team fighting for you. If you need help with this, Your Agent Guide does offer an agent placing service, and I can definitely help you find the right agent in your area for you and your needs. As always, thank you so much for watching today's video. I really hope it was helpful and useful for you in your real estate journey. And of course, have a great day.